Click the bell icon to get latest videos from Ekeeda.
Hello friends, we'll be going through bank reconciliation statement preparation format. So we'll have certain terminologies over here and we'll have certain rules and formulas. I'll give you some shortcuts to understand the transactions and go ahead with the sum in a specific format, which will help ease up preparation of the bank reconciliation statement and finding out the answers for all the questions. So now there are certain terminologies which I'll be writing down. Just go through them and understand them very carefully. So we have mentioned certain terminologies here. You can just read through them. First, that is favorable balance and unfavorable balance. Now, favorable balance is a positive balance, a balance which everyone prefers. Unfavorable balance, or also known as negative balance or overdraft, is something which no one prefers to have in their cash book or passbook. So if you're talking about favorable balance, that means the balance has been always positive. So for cash book, if you want to determine favorable balance, that has to be a debit balance as per cash book, and if it is debit balance as per cash book, it means it has credit balance as per passbook, which is termed as favorable balance. We'll get to know more about that once we go ahead with the specimen. Unfavorable balance is negative balance or overdraft balance. That means credit balance as per cash book and debit balance as per passbook. So debit balance is where it is known as favorable balance for cash book, and debit balance as per passbook will be unfavorable balance. Credit balance as per cash book will be unfavorable. However, credit balance as per passbook will be favorable. So the terminologies have been mentioned here: favorable balance, unfavorable balance, cash book, passbook, positive, negative, favorable balance. Now we'll go through the specimen of all these transactions and how to prepare and what are the formulas that can be used in preparation of bank reconciliation statement. Let's go to the specimen first. So we have the specimen here where we have mentioned the details of the format, how the sum has to be prepared. So we'll have starting point of the sum as either the balance of the cash book or the passbook. If you have the balance as per cash book, then your end answer will be balance as per passbook. If your balance is as per the passbook, then your end answer will be balance as per the cash book. Make sure you know which balance are you considering. Is it the favorable balance or the unfavorable balance? That's how the answer will be determined. If the balance is favorable, the answer will always be positive. If the balance is unfavorable, the balance will also be unfavorable as per the specific book which has been taken as a starting point. So let's go and understand certain formulas for this. So we have mentioned here cash book and passbook. Debit balance of cash book is always positive. Credit balance is always negative. Debit balance of passbook is negative and credit balance is always positive. So if you have added something, that is if you have deposited something in your cash book, that means you add the transaction, and the similar reflection will be seen in the passbook on the credit side. So anything that has been added in your bank account or in your account as per the money value will always be seen in the credit side of the passbook. And if supposingly any transaction which lowers down your balance, that means either the passbook debit balance or the cash book credit balance. So anything that adds up, the balance of either the cash book or the passbook is either seen on the debit side of the cash book or on the credit side of the passbook. And anything that subtracts the balance is seen on the credit side of the cash book or on the debit side of the passbook. This is something that you need to understand. Now, the first part is to check what is the starting point of your sum. If the starting point of your sum says that it is a favorable balance, that means that book is correct. If that book is correct, there are certain formulas what you need to understand. So just understand which book you are taking and which balance is being considered. So the formula goes like this. if you have taken the balance as per the cash book, or if you have taken the balance as per the passbook, and if the balance is favorable, that means that book is correct. So what you need to understand is the transactions which have been recorded in the books of accounts, or the transactions which have been mentioned in the sum, whether they are supposed to be added or to be subtracted. If the book or the transactions which they relate to are favorable, then you need to do exactly what it is supposed to be done. So for an example, if the balance as per the cash book is a debit balance, that means a favorable balance, that means the starting point is cash book. So cash book is correct. So what you need to do is that if the cash book is correct, that means the passbook is wrong. This is what we assume. So now there is a transaction which adds up in the cash book. So if it adds up in the cash book, and if the cash book is correct, you need to add it in the final statement, that is here. If the transaction relates to the passbook and the passbook is incorrect, and if it is supposed to be added, then you do the opposite of it. That means if it has to be added, if the transaction relates to a wrong book, then it has to be subtracted. That means it will be coming up here. You'll get more clarity on this when we go through the first sum of the counts. So just to make you understand, the book has to be favorable. If the book is favorable and that's the starting point, then you follow this formula. So for example, if your cash book is related and has a favorable balance and is the starting point, that means all the transactions, what you need to understand is to check whether they relate to cash book or passbook. If there is a specific transaction which says check issued but not cleared, check issued is first recorded in the books of cash book. So this transaction is related to cash book. What do you have to do when it comes to check issued? That means it has to be subtracted because it has been issued. So if it is supposed to be subtracted and the favorable balance is as per the cash book, that means cash book is correct and passbook is incorrect. That means subtract, and if it is correct, then you already have to subtract it. Record it in the subtraction side. Supposingly, check deposited but not cleared. So check deposited is referred to cash book first and then it comes to the passbook. So the first most thing is to understand which book it's related to. The first transaction is recorded in which book is the first most priority key. So if check is deposited but not cleared, check deposit has been already recorded in the cash book. So it has to be added, and if it relates to the correct book, that means you have to add it. So you'll add in this transaction. That's how the specimen will go. That's how the specific transactions will be recorded. This is how the formula is, and once we go ahead with the sums in the next video, you'll be getting more idea on how the specimen is formed, how the transactions are recorded, and how each and every passbook or cash book or favorable balance puts effort and puts a major important thing on solving these problems. Thank you for watching the video. Keep subscribing to eKida. Thank you.